If you have a girl and you really love her, like really, 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 really love her, you have to cheat on her. Because remember, if you're not cheating, you're not trying. Remember that. Words by Alex G. But I tell my girl, right, dude, like I really love you. Like I really, really like I love you so much that I'm trying to not get caught. Like that's how much I love you. Like if I didn't love you, I would just go out there and do whatever I want. But I'm creating a different phone number. I'm like meeting up far away from our area, not doing it in the house. Like I'm actually trying because I genuinely love you. Nah, it's a joke, guys. It's a joke. It's a joke. This guy clip farm. This guy. Terrible analogy. No, ladies, it's totally a joke. It's totally a joke. I am very monogamous to all my women. No, I'm kidding. Look, you know what? This just started like completely wrong. But bro, I really have not like like the more success I have gotten, like the women chart has just like done this, like gone the complete opposite. I promise, I promise, I promise, I promise, I promise. Literally, like the more success, the women chart has just fucking, I don't know. It's not hasn't been a priority. But why is brother? Just be patient, brother. Just family. All right, cool. Let's get started. What an interesting way to start the class, right? All right, let me share my screen. Now, before I share the screen, how many of, and by the way, guys, I feel like ass, but I am here and I am fucking ready to go. Did you watch the recording? Yes or no? So I get it. It's just 12 hours, but it's always like the same percentage of people that don't watch the recording. It's kind of interesting. I want to know why. I genuinely want to know why. Okay. Now, to the 67% that did watch the recording, did it clear things up for you even more? Did it make it more clear? Say yes if it did, no if it did. I mean, yeah, I figured. And that today's recording is gonna wipe out any concerns, any doubts. So it is just gonna end the poll here because it's not gonna move. It is a 91%. So that's crazy. So let's get started. Show my screen, bring myself right here. Like, if you didn't have an aha moment with this yesterday, you'll probably have it like right now. So if you guys can see my screen, just type one. All right, thank you guys. Thank you guys. So let's get started. So let's get started with our trusty AUD USD. So yesterday, AUD USD, we have approached our area of interest. So we have the trend in our favor. We are at the area of interest. We literally tapped it. We pulled up to it, and we said that all we are waiting for to execute this, all we want to execute this trade is a shift of structure. The shift of structure in the 2 hour was too far. The shift of structure in the 1 hour was too far. So we were looking at the 30 minutes and the 15 minute. What did we get in the 15 minutes and the 30 minutes? Can anybody guess? A shift of motherfucking structure. Like literally exactly what we would need, we got. So this is probably a trade, and I didn't enter this trade, but this is a trade that literally you can have the higher low, higher high. So this would be the higher high. This would be the higher low. You would wait for price to body candlestick close above. So while price is pulling up to the area of interest, you are actively watching it, waiting for the shift to structure. So here's where you have your higher low, higher high, priced them, didn't body close under here, created a right shoulder, broke, and then here is your shift of structure. This becomes your lower low, and then this becomes your lower high. You can either wait for the little retest and then enter on the engulfing, or you could have entered right at this break. So you got to enter the trade right here as soon as it broke the shift of structure, or you could have waited for the little pullback, then the engulfing, and then you would have entered the trade there. You could have had the engulfing on the same time frame you have to shift the structure, or you move up a time frame. So you would have entered either on this engulfing or on this engulfing right here. But that's it, guys. Like, this is the entry happening in real time, as perfect as it gets. We did this together yesterday. Like, it's all just looking at it, repeat, right? Literally rinse and repeat. We have the structure going bullish into here, into the area of interest. Once we get to the area of interest, we just have to wait for price to go from bullish to then bearish. Because when it goes bearish, is where we're going to have the market trend shift, the structure continuing with the higher time frame structure. And that's what you want, because you're trading with the higher trade trend, and you want to enter on the first shift of the counter trend trade. I know I confuse the fuck out of you there. So this trend is against the higher time frame trend. You can't trade against the trend. You always trade with it. So what we wait is for this counter trend against our overall trend, which our overall trend is to the downside. We wait for this counter trend to shift with the continuation of the trend. Basically, all I just said is wait for the shift of structure. Like we did this together yesterday. This is a perfect example happening live. I did not enter this trade. I was not looking at this market because it was not part of my watch list. But even if you waited, even if you didn't move your higher low on the 15-minute, because for whatever reason you didn't like it and it wasn't clean enough, cool, it's perfectly fine. You could look at it on the 30-minute. And on the 30-minute, you would do the same thing. Let's say you would have this as your higher high. And where would your higher low be? At this point or at this point? Okay, let's figure it out. This is a snake trick. Head of the snake, can it just go right through here? There's a little angle. There is two candles. Well, let's look left. So we'll put a little line here. We'll look left. We have one structure. Nothing really here. Nothing here. And yeah, this is just way too far. I mean, August. Yeah, it's just way too far for the 30-minute. So we don't consider this as the higher low. Doesn't look super clean. We only have one structure, and we would count this as the higher low. So if this is the higher low, you would have then entered your trade here once we broke the structure, or you could have waited for the pullback and you missed the trade, or you could still be waiting for a pullback from this market. It can still very much happen. So you either enter at the shift of structure, or you don't, and you wait for the pullback, which is what's going to happen now, and then you enter on the pullback. That's basically it, guys. It's really fucking easy. Like, really fucking easy. If this makes sense, say yes. If not, say no. Like, I genuinely don't know another way to explain it, which is wait for the shift of structure. Like, I really don't know like, I don't know how else to explain it. I mean, obviously, there's a majority that understands. I want this poll to be 100% before I move on to the next thing. So, if you guys really get it, try your best to not fat finger it. And if you don't get it, you didn't watch the recording, maybe go watch the recording. But I really want this poll to be 100%, like no trolls, nothing, because like this is very important. This is literally the entry part. Like as soon as we understand this, I'm gonna talk about little like couple of other things, and then we get right into the actual trading plan, like how to actually go about it. And I'm gonna put you guys through how I do it on a basic scenario, how I do it on an intermediate scenario, and then how I do it on an advanced. And I want to have the most amount of time for that as possible. So for the 6% that don't understand, just please ask your question regarding this example. I'm going to go through other examples right now, but I just want to understand to see how I can get you across that bridge as fast as I can. Okay, well, please don't spam the chat, guys. Thank you. All right, so let me put this here. Okay, so I'm going to do this, right? And then let me copy. All right, just gonna turn off the chat just for 1 second. So you would have entered only based on the 30-minute shift of structure without the engulfing candlestick. So if you go to the 30-minute time frame, this is going to be the shift of structure. When you go to the 1 hour or the 2 hour, you'll find an engulfing. So you might maybe have the 4 hour or something. But this trade right here in specific didn't have the clean engulfing. You can still enter the trade without the engulfing, but it is not recommended. You always need the shift. And again, I've answered this, but I'll answer it again. So I personally, I will enter a trade off of just the shift of structure and no engulfing because I could do it. I accept the risk. A beginner trader should not be doing that. And I'm at the point where I'm just going to explain to you things how it is, and then you make a decision how you want to do it. If you want to wait, wait. If you don't, you don't. It's up to you. I'm not going to force you to do something you don't want to do. This is what you need to succeed. You want to go around it. It might work, but there's higher risk. So that's all on you. So I've answered this already. The answer is yes. You can't enter a trade with just an engulfing and without the shift of structure. So if you ask me the question in reverse, you can only enter the trade with the shift of structure and then no engulfing. But you cannot enter with an engulfing and a shift of structure. Again, I've already answered this. All right, let's do another one that I'm. So, yeah, demotivates me when I see the same questions I've answered get asked and lets me know you're not paying attention. It just makes it more difficult on me. If the daily area of interest comes before the weekly area of interest, do we take the shift of structure on the daily or do we wait for the shift of structure on the weekly that has a stronger level? So once again, I've already answered this and you wait for whatever you want. If you want to take the trade at the daily, you take. So, I mean, I'm not even going to answer it. Go watch the recording. Okay, we have another one. During sell, price reaches area of interest, price closes above area of interest. Again, prices closes below area of interest. Wait for the retest. During retest, looking for shift to structure on the engulfing. Question. During the retest, do we have to wait for price to come back at the area of interest and look for the shift to structure? Once again, I said this yesterday. So is the stop loss 10 pips away? I haven't even talked about stop loss. All right, cool. Moving on. USD CAD. So I left you guys yesterday with some homework on USD CAD, right? And let's review it. So I ask you to identify if it's bullish or if it's bearish. Obviously, it's very bullish. This would be the higher high. Where is the higher low? Head of the snake. Dun, 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 dun. Do we have this right here or do we go straight down? I don't know. Let's do the little snake trick. Go right here. I think we've done this already. Yeah, and there's nothing. So this does not count as the structure. So this would be the higher low. Basically, whatever, I'll take the line off. This is the higher low. Look for an area of interest. Higher high, higher low. Work our way down. We'll count this as an area of interest. 1, 2. Or it won't count it as an area of interest. We'll count it as a level of support and resistance. But if we want, we could count it because of this level right here. We're just going a lot further back than we would want. So we can, obviously hypothetically count it if we want, like this, right? So we could have that, or we could just use these 2 points and it won't be a valid area of interest. It's literally just a level of resistance and support. It's not valid. It's just a level of resistance and support. And you can make a logical decision based off of that. So you can be like, you know what? I don't want to take a trade if it doesn't have an area of interest. 2 taps is not enough for me. I need 3. The importance of it and what's cool is that you know exactly what you're looking at. You're looking at a trade that's bullish, it's having a potential higher low at a level of support and resistance. It's not a key level because a key level has 30 touches. So do you take that trade or not? I could take it. I don't give a shit. Now, can you take it? Do you give a shit or do you not give a shit? The whole point of the strategy is for you to know exactly what you're looking at. And when you know exactly what you're looking at, then you can make a decision off of that. The whole point of the strategy is so you follow the strategy. But if you want to not follow it, cool, you can do that as well. But at least you know that you're not following the strategy. You are 100% aware of everything you are doing. So I want to make that very clear. So this would not be a valid area of interest. This would just be a key level of support and resistance. And then where is the shift of structure to enter the trade? Okay. We'll go down to the 1 hour, for example. The 1 hour, higher high, higher low, lower low, lower high. Not clean at all, lower low. Cool. So for the 1 hour to have a shift of structure, for me, it would have to be this candlestick right here. And then this candlestick right here. I mean, technically it did body candlestick close under, but when it's like that close, I wouldn't even count that. So this is where you would have the 1 hour shift of structure to enter the trade. Go down to the 30 minute. So you can put this as 1 hour or high to shift. So, if you want to buy in the 1 hour, that's where you have to wait. 30 minute. Cool. What do we have here? Do I want to count this right here? I mean, it looks pretty clean to me. I can't even lie. Yeah. So even if you are a little confused and you want to mark it off right here, you have 1, 2, and 3. Clearly, the structure point is at a level of support or resistance. So this is a valid lower high. So this would be the 30-minute lower high. This would be the 30 minutes lower low. What did we get here? We shifted the structure. So you could have entered either right on this break right here, or you could have entered on this retest with this morning star bullish engulfing candlestick, or could have gone up to the 1 hour and then you could have entered off of this engulfing push. Entry could have been up here. If you go to the 2 hour, you have a beautiful confirmation here. Looks perfect even after this right here. There's your morning star formation as soon as you have your shift of structure. So you have your shift of structure. At the moment of you having that, you also have a 2-hour morning star formation. You have a 1-hour bullish engulfing. Then you have your 30-minute little inverted head and shoulders. So, yeah, it gets literally right the fuck here. Now, some of you guys may be asking, what if when you enter the trade, it shifts structure to the downside now? Well, what about it? You already entered. You fucking set and forget. The trade hits your take profit or it hits your stop loss. You don't fuck with it in between. And that's it. So if you got this wrong in USD CAD, I highly recommend you go watch the recording. But this is a trade that you could have easily entered last night. Like it's literally right. It's literally what I've been repeating for 4 hours. Shift the structure into the area of interest. And then once you get the shift of structure, you get your entry, and that's it. I don't expect you to take the trade, obviously, because I haven't taught you how to put stop loss, take profit, and shit like that. But like the entry part, the enter trade is literally right the fuck there. If this makes sense now, say yes. If not, say no. Like I literally cannot make it any more clear. Like truly, truly, truly. Like I'm using live examples as well. It's not like I'm using a line chart. Like this is something that happened in the last 12 hours. Right? Everybody vote. Everybody. Right? So we're getting a little better. 96.4. So to the 4% of people that don't understand this fully, please ask a question and do not spam it. I'm gonna go one by one. As you can tell, I'm taking my time, as I always have, and I need it to be a valid question. So please, if you have a question only, the 4%, please. I'm gonna do another example, don't you worry. Bryson, I probably didn't answer your last question because it probably didn't make sense. In which time frame do you take your trades? I don't ever take trades. Why are you taking the trade above the area of interest? Because as you can tell here, it has already rejected the area of interest. So I'm taking the trade after it rejected the area of interest. Now, the fact that it's a little above, no big deal. What all we need is the rejection from the area of interest. Can you explain shift the structure again on this USD CAD? No. It was out of session as well. Yeah, there's many different factors on why you should have not wanted to take this trade. One, we're not at a real area of interest. Two, we were out of session, I guess, when that was happening. So, which by were we out of session? I don't know. Let me see. So what this is 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 10 hours ago. I mean, you weren't super out of session. Like I'll take a trade at 10 o'clock. That's a couple hours before London session. Like doesn't like I recommend for it to only be 1 to 2 hours before London. But if something pops up 3, 4 hours before, sure. Just the only thing that's gonna happen is exactly what happened here. When you take the trade 1 or 2 hours out of session, it's just gonna fuck around for 1 to 2, 3 hours until it gets to the session. Like that's the only thing that's gonna happen. Like, it's not gonna fucking buy. It's not gonna go okay at a session, immediate loss. No. The only thing that happens is that you don't have this momentum when you enter at a session. When the session kicks in, then you get this momentum. This is clearly London session momentum. This is pre-London session. So you can enter a trade not like right. You can enter a trade not in session and not immediately before session. It could be a couple of hours as well. I'll draw like a red zone, the areas you can 100% not take a trade. I'll do that now. Don't you need 2 consecutive time frames in sync? Yeah, I believe you have the daily and then the weekly in sync. Thanks, brother, for not paying attention. Out of 10 trades without waiting for the engulfing, what is the win rate? I would just make up a random stat. I don't know, honestly. Can you write out a high level of summary of steps? You best believe it. Live example, please. Shady. We have been doing this. I need to understand better the shift of time frame. That's my problem. Time. What about the wicks? What about them? Can we get a fake out once we enter at the area of interest? Oh, yeah. And it's going to happen. You're going to lose a lot of money on those. But it's part of the game. This could have literally just done this. And you would have just looked at yourself like, fuck. And then you just go to the next trade. There's nothing that you can do about it. I've missed the calls. That's why it doesn't make sense. Well, then you shouldn't even be here, honestly. You should just be watching the, if like this time you're dedicating, like if you haven't watched the last class, you shouldn't even be here. This time you're dedicating to this class, you should be watching the recording, catching up. You're not qualified to be on this call. But all due respect, right? Okay, a couple of more questions. Just want to see if there's anything different. I got my area of interest on the weekly. Why did you on the daily? Because that's the process of the top-down analysis. Alex, correct me if I'm wrong. Is the ship the structure the same thing as Chach? I don't know what the fuck Chach is. Sounds like some ICT shit. What happens if you miss an entry? What happens if you miss the bus? You wait for another one. What happens if you miss an entry? Wait for another one. Like, why does that not make sense? How is that not common sense? Okay, here we go. We go with another one. Let's see. I think this guy got it figured out. Oli. So basically, identify the trend. Wait for price to reach the area of interest, then waiting for the shift to structure in favor of the higher time frames on the 15, 30 minute, 1 hour, 2 hour, and then enter the trade. Yep, that's basically it. Thanks, Oli. You just summed up 3 hours. Do you want to switch spots, bro? Do you want to come here? Yeah. Say that. Imagine saying that and not showing it or explaining it. You're fucking, you go out of your mind. All right, cool. Perfect. Do one more example, and then we're ready to move on. Perfect example. NZD CAD, my girl. I never cheat on this one because she brings me money. I cheat on the one that doesn't bring me money. It's a joke. Again, it's a joke. It's just entertainment. It's for a quick giggle. So ha ha ha. Back to work. Okay. Don't take it to heart, ladies and gentlemen. All right, cool. This trade. We pulled up into the area of interest. We have a shift to structure right here. Shift to structure on the 1 hour retest, and then here's your engulfing. You could have entered this trade easily at this moment right here. You would have just been stuck into this drawdown. And if you did not place your stop loss correctly, you would obviously be in a potential loss if we were to do it too tight. The way we place our stop loss is if we are wrong, we are 100% wrong. How does that work, Alex? What the fuck does that mean? Just in a very second. Hold on tight. So we got to shift the structure, right? We're pulling up into the area of interest, higher low, higher high, higher low, higher high, higher low, higher high, higher low, higher high, lower, lower high, engulfing, sell. That's it. You enter the trade right here. This is your perfect entry. What do you do if the trade comes back? What do you do if you're in a rush and you get into traffic? You fucking deal with it. There's nothing you can do. You can go through the emergency lane, but you're gonna get a nail and you'll probably get a ticket. Trust me, both have happened to me. And then you end up becoming even more late because you have a nail and then you gotta have the fucking police officer stop you. It's happened to me. So there's nothing you can do about it. You just gotta deal with it. It's part of the game. Same thing here. Price goes into profit, then goes back into drawdown. Oh well, you deal with it. You set and fucking forget. So this trade has been set, like just doing its thing forever. Now let's say you didn't enter here for whatever reason, and then it goes bullish again. Cool. You let the market show its hand first, and now you can let it show it again. You can wait for another shift structure, which happened right here. Shift the structure at this very moment right here. High low, higher high, lower low, retest, engulfing another entry right there. You could use a 30-minute, but you can have it right here as well. Higher low, higher high, break, retest, engulfing. Stop loss above. Oh, wow. As soon as you enter the trade, goes into drawdown. Sucks. Deal with it. Part of the game. If you put your take profit and stop loss correctly, that should not be a problem. So here's a perfect example of the shift of structure happening once again on the 30-minute time frame. Higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low, higher high. Shift structure, retest, and engulfing candlestick. There was your trade. I'm literally just repeating myself, showing you guys multiple different scenarios. But this is the perfect example of the trade that we were looking at. Price hit a lower low. We identified a lower high. And on this lower high, we have a retest of this resistance, and support. And then this is where we would go down to the lower time frame. And in here is where we're going to have the bullish structure. And on this bullish structure, wait for the engulfing, wait for the shift to structure, the engulfing, and then you enter the trade. I'm literally just repeating myself. If this makes sense, say yes. If not, say no. Oh my God. The poll started so good and then it got fucked up. Everybody say yes. I want it to be 100% so bad. And honestly, if you have not watched the recording, leave. Get out of here. I don't want you here. Leave. Leave. No, for real, get the fuck out of here. Go watch the recording. Fuck, dude, I want this to be 100% so bad. I'm gonna do it again. Does this make sense? Yes or no? Don't you fucking fat finger it, Henrik. Now we just got some trolls. That's how you fucked it up. No, that's how you fucked it up. It was 100% now. That's it. Okay, cool. So now that we understand that, let's get into the next point. Dun, dun, dun. So dramatic, right? Okay, cool. So now we understand how to do the proper top-down analysis. And we understand when we go to enter a trade that we only need a shift to structure and an engulfing entry candlestick. We've done multiple examples live where we've had the shift to structure and the trade goes in the favor. And we've had many examples with the shift to structure with the engulfing and it goes in the favor. We understand we can do this in pre-London, London, pre-New York, or New York. Let me give you guys the red zone that you should not be entering a trade. So this marker right here. Who the fuck is this guy, huh? Who the fuck are you? All right, so no, I don't want to get better trade ideas. Oh my God, all this to make the picture better. Oh shit, cool. Okay, this is the red zone right here. You do not want to be trading in this session. That's it. You can enter a trade anytime inside of this session. Anything inside of here is good. Anything outside of here is not good. Why? How do you know that? How did I back? I don't know, dude. I just made this up right now. So you either want to take it or don't. It's basically it. Take a screenshot, do the conversion on your time zone where you are in the world. Cool. Now, so we understand what time zone is now. And that we only do this on a 15, 30, 1 hour, 2 hour time frame. Let me just add this here for better context. Whichever one looks cleaner. Cool. Now, how do reversals work for an entry? Dun, dun, dun. And how to place your take profit and stop loss. So we're going to cover these two things today. And then tomorrow, we're going to talk about how to put everything together. So if you notice, something that we wait for, right? So let me just copy this. So something that we wait for once we go do all this shit, right? Once we're waiting for the shift of structure, if you notice on the shift of structure, sometimes there's reversal patterns. Just sometimes, not all the time. You can see here an inverted left head and a right shoulder. This is a reversal pattern. A head and shoulders, if it happens at the top of a trend, it means that it's then going to reverse to the downside. So this is how the head and shoulders would look like. Bullish structure, then it would create this structure right here. So if I take off the head and shoulders tool, that's what it looks like. But you can see that this was the higher high. This was the higher low. What do we have right here? A shift of structure. Or even if it was like this, what do we have right here? A shift of structure. So I like having these reversal patterns at the areas of interest. Like if I get it, even better. If I don't get it, not that good. You want to have it because it's going to give you an extra confirmation into your trade. So the reversal pattern at regular head and shoulders is when you're going to look to sell. An inverted head and shoulders is going to be when you're going to look to buy. Very simple example is literally what the fuck is happening right now. Right here, we have an inverted head and shoulders. You can see it literally right here. Let me take off these lines so you can see it better. Literally have it right here for your entry. Left head, right shoulder. Look at that. Beautiful bullish engulfing after the break of the shoulder. Oof. Beautiful. Now, I like my reversal patterns specifically like this, right? Because it is a more confirmed shift of structure. I want the neckline. I don't want the right shoulder and this to be like higher than this because technically this is still the lower high. This is still technically the lower high and this is still technically the lower low. I want this to break above because then that is the shift of structure. And then when you have this pullback, you just have the right shoulder confirmation. That is perfecto. Get rid of your wife. take all her money and put it on this fucking trade. So you want to wait for that specific shift. So it's just how it is here. If you notice, this is the left, the head, and look how this shifted above, broke above this. So if you take the pattern out, and just move the pattern up, this was the lower high, and this was the lower low. What did we get here? A shift of structure. Structure just shifted. And when it shifted, it then created the right shoulder and it went up. So you want to enter the trade, if possible, with the shift of structure with a head and shoulders pattern or inverted head and shoulders pattern. It's a beautiful formation. Now, yes, even though we did get another one here, doesn't matter. Why? Because we're trading with the higher time frames. We have a level of support and resistance. We have the trend in our favor. Like, this is why you want to trade with the higher time frames and not with the lower time frames. That's just a very simple example. We can go on many more. We can go to our trusty example. What was it? AUD USD. AUD USD. Cool. We go to the area of interest. We go to the time frame for the shift of structure. Cool. What do we have here? We have a motherfucking left little ugly right shoulder. Even though we don't consider it the structure, it's fine. It's just a pattern. You gotta just look at it. Pattern is kind of like, I don't know, terrible analogy. The whole point is that you see the head and shoulders. It's an added confluence at the shift of structure. It's basically it. Oh, wow, what the fuck do you have here? So this is not how I like my head and shoulders. Left, head, and then right shoulder. If you notice, this head and shoulders formation is not breaking the structure. This is the higher high, and this is the higher low. We didn't break the structure. Now, if this were to be a little bit under, perfect. I love it. That's my type. But since we did not, that is not my type. This right here is my type. Why? Because this is the higher low, and this is the higher high. We broke the structure. We came back and created the right shoulder. Perfecto. But what matters is that we shifted the structure. We are now bearish. This is now the lower low, and this is now the lower high. Because in this case, technically, we're still bullish on this trade. So we can't use this in our favor because there is no shift of structure. We can only use this in our favor when we have a shift of structure. Now, on that shift of structure, if you have a pattern like this one, like the head and shoulders, phenomenal, even better. Dude, I can go all day on these head and shoulders patterns right here. Lower low, lower high, lower low, higher high, boom. Shift of structure on this pattern. Look at that. Perfecto. Beautiful. This was the lower low. This was the lower high. This was the lower low. We shifted the structure. Got another one right here. I can do these examples literally all fucking day. Left, head, right shoulder. We have a shift of structure. Let's put it right here at this point. We don't, not my type. I'll still take it. I'll take it. If she fucking has blonde hair, but their extensions, I'll take it. It's blonde. It gets the job done, you know? If you don't know, well, then you gotta know. No, it's a joke. Again, it's a little giggle. No big deal. Lower low, lower high, lower low. We have here a very small shift of structure. But again, if you guys notice, everything we are doing, like I said, is being built off of the structure, the patterns, the entry signals, the fucking area of interest. Everything is built off of the structure. Like literally everything is market structure. Now, if this makes sense on the patterns and how the pattern is and how it works, because it's just market structure, say yes or say no. 20% left. 20% left. Okay. So quite interesting that it's the same 4% that don't understand. Please ask your question. Diego said, Alex. Yes, Diego. Okay. Start reading some of these questions that will hurt my IQ. Do we need to wait for the 30-minute candle to close? Waiting often leads to missing trades. When it cleared the candle will close above below the structure shift. Would it be better to enter with 4 to 5 minutes left, anticipating the close? Adita, why are you so scared of missing a trade? The fuck is the problem with that? Why you like, dude, why you pretending like there's not going to be more trade? How are you going to enter a trade when the candlestick has 4 to 5 minutes left? Like, where in the fuck have I said that? Never. Because in 4 to 5 minutes, how we've seen in the past, a candlestick can completely change. And now your shift structure is no longer valid. It didn't want to close above or under. If you missed a trade, oh fucking well. It wasn't meant for you anyways. You go grab another one. You never enter a trade with, like, dude, you're anticipating the close. It's like you're anticipating. I don't know. Let me think of something crazy. I don't know. It's like there's no waves in the ocean. And you said, no, 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 there's gonna be one. There's gonna be one. And you go out there and you just fucking go crazy surfing and you say, yeah, yeah, there's gonna be one. I'm anticipating it. Dude, you're not in the anticipation game. Like, you're in the confirmation game. There's no confirmation in anticipating the close. You only wait for the confirmation. You can't enter, like, go tell an investor, right? Because every single time you go take a trade, you have to pretend like if you're using someone else's money, you have to explain to them the trade. Explain to the investor that, hey, yeah, I'm going to enter this trade because I think it's going to close a certain way. But we have to enter before it closes just because I think I'm anticipating it. What makes more sense? Tell them you're anticipating it, or hey, I have the confirmation that it closed how we need it to close. Or hey, let's enter before it even lets us know that we should enter. Come on, dude. My IQ just dropped. Let me see if I can get it back up with a different question. Okay, dude. What the fuck does this mean? No, no, no. Michael, dude, what is this? Is it correct to have a sunny day with 23 degrees, a 4-hour OB, and a 15-minute OB in the north over a sine range accumulation, and the trend is following the wind of the south and the wave of the pattern? Who the fuck are you, dude? How did you get in here? Dude, I hope that was AI or something, because what does that even mean? I got it. Do you only use the bodies, not the wicks for the patterns? Miguel Felipe, at no point have we used the wicks this whole entire boot camp. But yeah, we don't use the wicks, sir. Please answer my question. Why is the area of interest valid in the homework? Eddie? Eddie. 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 My brain, Eddie. This is not a valid area. You know what? Fuck it. Go watch the recording. Would you take a trade when the head and shoulders appears in the higher time frame? So when we get to that point, I'll explain it. But for now, We're just at the entry point. You never saw my question since day one, Anise. Sorry. All right. Couple of more questions. Dude, I Dude, that was a genuine question. Of course, not a low IQ one. You don't have to diss everyone, bro. You gotta chill, dude. If you get booty hurt, sucks. It's just a joke, man. Handle a joke, bro. Just chill. Dude, you gotta chill. It's just a genuine joke. Got it? I mean, I could be a robot if you guys want. I could just be here like talking like this, and then we only do this and this. It has to be character into it. Or I don't know if that was trolling. I don't even know. Could you please explain the fake breakouts after executing the trade? And I can't explain it. It just happens. Oh, it was a joke. Okay. Aditha, now go fuck yourself. All right, cool. Let's move on to the next topic. And it's going to be dun dun dun. Where is it? I have such a mess going on here. I'm gonna fix it. How to place your take profit and your stop loss. Oh shit. Oh, bro, I feel like ass, and I'm here, thugging it out. Okay, you guys ready? Okay, this is literally it, guys. Right? I should be able to not even have to show examples of it, and then you guys be able to execute it because it should be so simple. Stop loss always goes under the shift of structure by 10 to 15 pips of the bodies. On the time frame, you got the shift of structure. And if you can make it under the area of interest, even fucking better. The take profit goes to the next closest structure point on the time frame that you find the area of interest. What does that mean? Or if that's not self-explanatory enough, this is what it means. If you have a daily area of interest, daily structure, take profit. If you have a 4-hour area of interest, 4-hour structure, take profit. And if you have a weekly area of interest, weekly structure, take profit. You always put your take profit to the structure, the first structure point it can have a retracement from. Basically, it should be very self-explanatory. This is how I have managed to enter trades precisely, how I have managed to avoid many losses, and how I've been able to maximize many wins. It's simple, it's effective, and it fucking works. The only thing you have to do is follow it and be patient. Now, these are rules you can never break. You can never break this rule. This rule is irrebreakable. I don't know how to even say that word right now. You cannot break this rule at all. At fucking all. But you could break this rule because you could always minimize, you always want to minimize your losses, but you never want to minimize your profits. You can set a daily take profit as your zone, and once price gets there, you say, fuck it, I'm going to follow set and forget to the end. Brother, I'm with you. I'm riding that boat with you. But you can never not have your stop loss properly placed because you always want to minimize your losses. You never want to minimize your profits. So what do I mean by that? Oh, dude, I'll just show you. Could have just, dude, I would have just showed you, dude. You could have just asked. You know what I mean? Bing. Oh, this fucking thing. So we have this shift of structure, right? Lower low, lower high, lower low, higher high. Say we enter anywhere here. Doesn't matter. This is our entry point. Our stop loss would go 10 to 15 pips under this structure point. So 10 to 15 pips. Obviously, we're on the daily time frame. So 10 to 15 pips doesn't look like shit because this is 166 pips. But just so you guys get a visual, this is where you would enter. Your stop loss goes always 10 to 15 pips under this area because if price hits this area, if price hits your stop loss, what does that mean? Any guesses? Well, you can't type, but you should just guess something. You lost, obviously. No shit. I know you'd probably say that, but no. If price hits your stop loss, what do we have? A shift of structure. Your trade has now changed direction. So you're supposed to be entirely wrong. So you put your stop loss at a point that if it gets hit, the structure is no longer with the trend of the market. So you're completely wrong. So you always place your stop loss at an area where if it gets hit, you are completely wrong, And then your take profit goes to the nearest daily structure point. Perfect example of this is going to be USD CAD. So if we get a shift of structure on the 30-minute time frame, this is going to be our entry right here. This is our bodies right here. So we have 9 pips, let's say, whatever, right here. So we're at, let's just say 9 pips, right? 9 pips of a stop loss to this structure point. You want to give it 10 to 15 pips from this structure point, right? Or like not this structure point, like from the lowest structure point. If we add 10 pips, that'll be 19 pips. That would be your stop loss. So if price, for whatever reason, body candlestick closes under this area, price is now completely wrong and we are now creating bearish market. So you want to make sure that you have that breathing room for that market. Another perfect example is going to be this one. So right here, let's say we would have entered at this engulfing candlestick. And this is the lower high, like the last lower high. Like it doesn't have to be this lower high, or if there was another one. Like you want to have it at that last high of the shift of structure. Let's say this is the point right here. We have 20 pips. You want to add 10 to 15 pips to that. So it would make it 30 pips. So this would be the stop loss right around here. My stop loss is a little bit tighter. I think I have, so I'll have to check my phone, but yeah, like that's basically it. You can have it 10 to 15 pips from this point right here. And that's it. If you notice, price never, like it came back, did all this fuckery, did all this bullshit, but it never broke above the highest structure point where the market shifted the structure. And if it were to do that, you would still have about a couple of pips just in case if it was a fake out or a liquidity grab, it completely reverses. So the way we place our stop loss like this is to avoid the maximum amount of liquidity grabs, the maximum amount of fake outs. Just avoid all that nonsense. Here goes another example. We have a shift of structure right here, right? Let's say we have the shift of structure around the 15-minute, right? We have the shift of structure right here. Shift of structure engulfing. You enter the trade right here, or right here on this engulfing, wherever. You have to put your stop loss 10 to 15 pips from the highest point of where this market shifted. So if this is 16 pips up to this point, you have to add 10 to 15 pips on top, which would make this a 26 pip stop loss area. It's very fucking simple, guys. Wherever, so let's say that this market is bullish. We're here on the shift of structure. Enter 10 to 15 pips from the highest or lowest point. It's very simple. If this makes sense, say yes. If not, say no. It's very, very, very simple. It's like systematical. It's almost impossible to fuck up. It's like, all right, where is the last shift? Oh, it's here. Okay, cool. Just add 10 to 15 pips. It's basically it. Okay. So, for the 4% that don't understand this, can you please let me know why now in the chat? I want to answer your question. As usual for the stop loss, we're not counting the wicks for the most part. Douglas, I believe I said this, but I'll say it again. Yes, it's going to be to the bodies, to the bodies, to the bodies. So you place your stop loss to the highest or the lowest structure point of the time frame and not the current higher low or higher high. Yeah, correct. It's wherever you have the shift of structure. That's what I just explained. When you set your stop loss and take profit, the trade doesn't present a good risk to reward ratio. Do you still take it? The answer is no. I do not take trade. It is not a proper risk to reward. Also, how would you grade the trade? Don't worry about it. We'll get into that soon. What if the weekly and daily area of interest overlap? Where do we place our take profit? Great question. Federico Ortiz. Great question. We'll get to that in just a second. Let me turn off the chat. I want to catch up. It's from the bodies, guys. It's from the bodies. Josh, just talk to the support. Josh Thurville, just talk to the support. On average, how big could the stop loss be? You want to know? I don't know. I like literally, I don't know. I don't care. Like, there's never a fixed amount of pips you can have the stop loss. Like, per say, I only use a 10 pip stop loss. Hey, bro, you're a fucking degenerate. How do you just put something fixed when everything in the market is in the complete opposite of being fixed? Everything is different. So you have to adapt to that market. For example, here we would have a 20 pip stop loss. Here we would have a 26 pip stop loss. Here we would have I don't know, like a 30 pip stop loss. This one. But we have 30 pips. So you can't have a fixed stop loss ever. And on average, I don't know. I would lie if I would tell you if I know what the average stop loss would be. Like that doesn't matter. What matters is the average risk to reward. Dude, you can have a fucking 100 pip stop loss, but if you have a 200 pip take profit, who cares? It's the same risk to reward. You're risking 100 to get to 100. Like literally nothing changes. Yeah, minimum risk to reward is a 1 to 2, 1 to 2.5. Thank you for the medication I should take. So you're saying if you want to do 15, it might be worse, so it can cover the whole area of interest. Yeah. So perfect example would be this one right here. So you can make it 10 to 15 again, whichever one you'd want. And you you can tell here at from this point right here, you make it 10 pips. And so it was at 20 right here, right? 20 pips at this point. If we add 10 pips, then it's now at 30. So I clear the structure and I clear the area of interest. But for whatever reason, let's say we were down here and we're at 30, you still have a little bit more left in the area of interest. If you make it 35, you pretty much clear the area of interest as well. It's the decision that you want to make at the end of the day. Oh, I get it now. I done lost so many trades because I put the wrong top stop loss. It's very common. Jeremy B, please stop spamming. Thank you. All right, cool. So it's very clear that everybody understands stop loss. Cool. Now take profit. Very simple. And this is the daily time frame, right? Don't get confused now. Don't get intimidated. Right? Let's just say it's 10 for bullish, which I think it is. We enter here on the shifted structure. We have our stop loss. Now, where the hell do we place our take profit? Well, remember, this is the higher high. This is the higher low, higher high, higher low. The trade is in here right now. So since it's in here right now, I always anticipate that the market can potentially create a double top and then reject to the downside. Always. I always anticipate that the market will do that. So my first take profit will always be at this structure point, the daily structure point. If we're buying at a daily area of interest to be my first take profit. So this right here will be my first structure point, this daily structure point right here. Now, if for whatever reason it breaks above that, cool. Then that's where the real set and forget comes in. And then I'm just actively watching this, watching this, watching this, watching this, watching this. So I need to have a minimum of a 1 to 2, 1 to 2.5. So risk to reward 1 to 2 or 1 to 2.5 at the next structure point. Very simple, very easy, very self-explanatory. For example, USD CAD. If you notice right here, we are buying at this structure point. Where would my take profit be? Right here at this next structure point. But Alex, you have a greater risk to reward. What's so bad about that? Why would you not want to have a greater risk to reward? So yes, this is what my trade would look like. Buy here, at the area of interest or support and resistance, have your shift of structure. After you have your shift of structure, you put your stop loss 10 to 15 pips under it, and then you put your take profit at the next structure points on the time frame that you're buying at the area of interest. Voila, magic. Same thing here. So this trade right here is a bit different, but same thing applies. If I were to enter this trade here, my take profit should be this level right here because it's the next structure point. So if I were to take in this trade correctly, my take profit technically would have already been hidden. But since I'm a degenerate trader, I can sometimes break the rules, but I know exactly what I'm doing and I accept the rules that I'm doing. So I'll teach you guys how to break the rules later. First, you got to learn the rules so you know how to break them. AUD USD, same thing here. You enter the trade here. Let's do this, do this. You enter the trade at this point right here. So this would be your lower high. This would be your entry. Let's say your stop loss is right above here. This is your first take profit at this next structure point. Now, if once you see all that, and then you get your shift to structure and you get your whatnot, and your risk to reward does not make sense, now you just simply don't take the trade. Or if you would like, what you can do is you could extend your take profit. You never want to minimize your stop loss. Never. Don't ever fucking do that. If you want to get if the trade where you have it set does not have the risk to reward that you need to take the trade, then you just be ready to hold longer. But you never, ever want to have a tighter stop loss. Ever, ever, ever. You always want to, if anything, have a bigger stop loss. And then just put a bigger take profit. So it's not precisely exactly to the bodies of this structure point, which is fine, but now we're a little bit lower. I would much rather have to wait for a trade to go to a different take profit point than have to sweat it out and put my stop loss at a point where I know if it gets hit, I could still be wrong. I could still be right on the trade, and the trade just wicks me out. For example, let's say I enter this trade right here, and just because the risk to reward does not make sense, right? It's at a 1.6, I say, fuck it. I'm going to put my stop loss right here. So I get the 1 to 2 or 1 to 2.5 or whatever. And then this trade does this. Well, without breaking the structure, obviously. Goes back in, there's a lower high, wicks me out, and then goes to the take profit. I'll be fucking pissed off. No, you always want to have your stop loss placed correctly, and then you can modify your take profit to be a little bit longer. So if you buy on the weekly, you have a weekly area of interest. You have the next weekly structure point. If you buy on the 4 hour, I don't know. So if we were to buy here on the 4 hour, this would be a 4 hour area of interest. This would be a take profit right here. This lowest next structure point, basically. Does that make sense? Yes or no? I feel like that's even easier to understand. Amazing. These are the results. 99%. No, to the one motherfucking percent that said no. I dare you. I fucking dare you. Any questions regarding this? So where would we place your take profit on NZD CAD? I already said this, so it's supposed to be set right here. But since I'm a degenerate person and I'm not following the plans because I want to, I place it at a different point, and I'll explain that later. Again, I already said that, but I guess you don't want to hear. But it's okay. I'll repeat myself. Let me turn off the chat for just 1 second. Okay, let me see this right here. Daniel French. I've seen this guy a couple times. Let's read this together. If price breaks past the area of interest, then shifts the structure and breaks above the area of interest again, do you still put the stop loss past the last structure point or just under the area of interest? Great question, pal. Great question. I do it just above or under the area of interest. So this is his question, right? To my understanding. Break, right? Then on this retest, when you're on this retest, this shift the structure breaks under the area of interest, and then we break above the area of interest. His answer is, do you put your stop loss above, or no, you put it under the last structure, or do you put it under the area of interest? Great question, by the way. Great observation, Daniel French. And the correct thing to do would be under this structure point. But again, the technically shifted, you have the area of interest in your flavor, blah, 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 blah. But again, keep in mind, if it does break above, it breaks under here, it did shift the structure because this is the higher low. So it would be a case by case trade, honestly. I would probably go with this because if you were to do this, it would require a lot more of this, but it would just be a case by case thing. The correct thing to do is this, though, to have it under this, but I'll probably end up doing this. Daniel French. Amazing question. Have you ever closed a trade before you reach your take profit? Of course. And if so, why? Because why not? I got him. How did you know your trade was going to reverse last week on EJ when you closed it? I didn't know it was going to close. I closed it because I hit my 250,000 that I wanted for the week. It was more like a social media thing, but I should have just continued to follow. I understand perfectly, bro. I literally just had my aha moment. Welcome to the other side. What if we don't have structure? Well, then you got a bigger problem, bro. And how are you even trading? But you said we never set a take profit. Yeah, no, you never set a take profit. So again, that's like a little more advanced, but yeah, you never ever set a take profit, like the numbers. You never go on the MetaTrader and plug in the numbers. You only plug in the stop loss numbers. The take profit, you're just always watching because you want to make sure that you can either make a decision based off of the market's reacting, if you want to close at this point, or if it keeps going up, then you just keep holding and you keep monitoring it. You never actually place these numbers on the MetaTrader. You only just look at it. Do you always set and forget, or are there times that you leave early? There's times that I leave early. I do set and forget more than the average person, I can tell you that. Okay, let me see this guy right here. Brett. When it's a really big question, I don't even read it. I just copy it here, bring it over here, we paste it. Okay. You said during the challenge and a podcast that you can tell if there won't be any movement in the market until later. How do you know that? How can you tell if there will be volume that will move the market to where it needs to go or stay in the area it's in? Great question. So to answer the first one is, and I'm sure I have said this, and this is a fact. So how do I know that? It's like an old fisherman. Like, how does an old fisherman or an old person, they just know shit? Like they'll be like, son, today at 3:42 in the afternoon, it's gonna rain. It's only gonna rain for 18 minutes and 20 seconds. And then after that, it's gonna be sunny again. How do they know that? Because they've been through 1,000 fucking rainstorms. They've seen it a million times. It's just a pattern that's gonna repeat itself. So that's kind of how I know that because I can literally like see it because I've seen it 100 times. And how can you tell if there's going to be volume or not? It's just going to be experience, bro, honestly. Like that's literally the only thing that changes it. Hope that answers your question. Like there's no like specific answer to that where it's like, well, you need this, this, and this. Like you just know. You just look at the market and you're just like, oh, here it goes again, basically, kind of thing. All right, cool. Any more questions? Do you ever put your stop loss to break even? I like this one. I like this one. I needed this question. And you know what? I'm gonna have the perfect analogy. It's gonna be fun. It's gonna be a bit rude, but it's gonna be the perfect analogy. So let me just turn off the chat real quick so I can catch up. When do you move your stop loss to break even? Let me see how I answer this. There's two ways I can go about this. I can go straight savage, or I can go like right in the middle. And I'm really thinking of going straight savage on this one. Give me a second. Let me cook. Nah, I can't go savage. Well, my mind's just went crazy, but you can't give me a second to think, dude. Think of an analogy, right? We just go with the surfing analogy, honestly. Surfing, surfers. So to me, all right. So to me, when somebody asks me to modify their trade into break even, to me, what I get an understanding from is you're not confident in your trade and you didn't accept the risk. I personally myself have lost many trades by not moving my stop loss back to break even. And I'm talking about, but there's a lot of motherfucking trades that I have won because I did not put the trade back at break even. I can't stress to you how many times I have entered a trade. And as soon as I enter it, it'll do this move and then do this and then go back and then do this. A lot of people would put their stop loss at break even. And when they do that, the market takes them out of break even. They don't lose. But then that person doesn't have the psychology, doesn't have the trading plan, doesn't have the whatever to re-enter the trade. Because even if you are going to re-enter the trade, why the fuck did you even just put it at break even? Just let it hit your stop loss, let it hit your take profit. I am the type of person that I just ride it out the whole way. I accept the trade before I enter it. I pre-calculated how much I'm going to lose. So if it loses, I know exactly how much it's going to lose and I accept the outcome because I already pre-calculated the risk. And then the take profits, obviously the whole reason on why I'm even taking the trade. But kind of putting your trade to break even is like you're scared of the commitment. It's like you want to go surf, but you want to make sure that the guy that puts you on the wave, so I don't know if you guys know, but there's jet skis that they put you on the wave just so you can catch up to it or whatever. You want him to stay there with you just in case if you fall. It's like, dude, if you fall, you have a wetsuit, you have a board, you're gonna float, you're gonna be fine. Like, why do you need this guy to be around you the whole entire time? It's just gonna defocus your surfing. Like if you're trying to surf right here and you have this guy on a fucking right here, yeah, it's like your security. Like if you fall, he'll pick you up quick. But dude, it's a distraction. Like you might fucking run into him and then you fall and then it messes up your whole wave. It's time to drop you off and bounce, and then you just keep surfing. But you can't have the fulfillment of surfing and then the security of him being there just in case if you fall. You're not enjoying it to the maximum potential that you could be enjoying it. Same thing with trading. You can't enter a trade and have the maximum upside of making the money, but then always wanting to minimize the risk and reduce risk. You want to have the best upside potential possible, but you always want to be cautious with the risk. That's not really how it works. You accept a flat risk, whatever it is, $100, 1,000, 10,000, whatever. And then the upside is everything that you're pretty much looking for. But you can't always look to minimize that risk and maximize the profit without having to put something at risk. I think modifying the trade to break even, I think constantly moving your stop loss up, to me personally, is one of the biggest mistakes anybody could be making, because you're not accepting the risk. You're not doing it all the way. You're like half at like you're scared, my opinion, right? And I know a lot of other traders would say otherwise, but to me, I never put my stop loss to break even. I take the trade, hits my take profit, hits my stop loss, set and fucking forget. If that makes sense, say yes. If not, say no. Dude, I feel like ass. Now, don't get me wrong. You could do it. You could put your stop loss to break even after whatever, 20 pips, 100 pips, whatever. I don't know how to put my stop loss to break even. Like, you could put your stop loss to break even. But if it comes back and it takes you out of break even and it goes into your favor, don't be mad. And if it goes into your break even and you avoid the loss, don't think you just fucking crack something, right? Don't think that it's like the right thing to do. So this is, everybody understands. And again, this is more of a risk appetite thing. For me, if you're out here, bro, like if you're gonna cheat on your girl, you're not gonna take the girl out on a date. You're not gonna take her to the motel, and you're not gonna not execute the trade. Like, you really did all that to not do it. Like, the whole point of everything you did was for that. Get the job done. Don't go halfway. You can't half cheat. You gotta fully fucking. All right, cool. Do you not even set a take profit when you go to bed? Brother, I love those. Dude, for me, like the biggest sweat is when the trade is like here, and I just go to sleep. I'm like, dude, I'm gonna wake up. I'm either gonna be pissed off or I'm gonna be fucking happy. And that's my fun out of this. So yeah, I'll go to sleep. I mean, dude, yeah, I don't put a take profit. What do you mean? This guy literally asked, you go to bed without putting a take profit. Dude, I just don't put a take profit. Would you ever set your take profit at a strong area of interest rather than the next daily structure point, as if it's the next structure point? Yes and no. It's a case by case kind of thing. Will you close if the 4 hour rejects? So this is where like these curious George questions start coming in, right? Like, would you close if the trade like is almost at your take profit and then like it starts slowing down and you see the 4 hour rejecting? Like, would you do that and not wait for that? And it's like, bro, all I need is a minimum of a 1 to 2 risk to reward, right? This is all I need to catch a trade. Now, if we're at a 1 to 4 and I see shit going weird, I can then there make a decision. Like, all I need is this, right? Where I should be getting out is here. But if we're at this point and we're acting weird, yeah, I can definitely get out of the trade because we've already surpassed the minimum risk to reward that I want. But if we're at the minimum reward that we would want, like if we haven't reached the minimum risk to reward that we want, right, which would be up here, and then we start acting weird, I can't do anything about it. I can't close a trade if it's not at a minimum of a 1 to 2 risk to reward. If the trade starts acting weird before hitting the take profit, which is a minimum of 1 to 2, okay, now here you have to literally hold it out. You got to thug it out. But if we start acting weird at a at a 1 to fucking 5, or at a yeah, like at a 1 to 4, and we already surpassed 1 to 2.5. Yeah, dude, you best believe I'm gonna close. But if we haven't hit the 1 to 2.5, I can't do anything. Minimum you always close your profits on is a 1 to 2.5. Very basic example. Why did I want to make $250,000 last week on that trade? Can anybody think about it for a second? Just do any common sense. I'll give you a second. Why do you think I wanted to close at $250,000 precisely? Why? And this is all backed by facts. Because I risked $100,000 on the trade. When you risk $100,000 on the trade, I want to make a 1 to 2.5, which is $250,000. If you saw the week before this last one, I lost 98,000 or 106,000 or whatever. I risked $100,000. I lost. This next week, I risk $100,000 again, and I want to get a 1 to 2.5. It's the only way I'm going to win my losses back, and I'm going to have some profits for the next trade. So I wanted to close at 250 because it was a 1 to 2.5 of what I risked on the trade. Remember that. Like, if you guys just do a little bit like digging, you guys can see that. I think you have commitment issues, bro. I do right now. Women right now, like commitment's not there right now. Do you put alarms when you have a trade on? Yes. Do you ever add positions on pullbacks? No. We only enter one position. Have you ever seen me do that? You've never seen me enter, like you've never seen me scale in. I only enter one position. I don't scale in. Because remember, every single trade that you take is a whole new confirmation that you have to enter. And when you have to do the confirmation, you have to go through the checklist. You have to go through the whole fucking shit again. And if the trade's like halfway, all the confirmations are halfway. It's like not a full confirmation. So no, you can't scale in a position. To me, it's the most degenerate thing ever. I rather risk more on the real trade than having to scale in a bunch of different positions throughout the whole thing. Like I rather risk everything I would risk on these little scale-ins. Like when have you ever seen my chart with this? Very rarely. Like 1 out of 100 trades. Like I don't do this ever. I do one big trade. Whatever I'd risk in these bullshit little scale-ins, I'd rather just risk it on the actual trade. All right, cool. Ladies and gentlemen, if everything up to this point makes sense, say yes. If not, say no. Everybody vote. Everybody vote. I feel like I just feel sick. I know how to fix it. I'm Cuban. Go outside, get some sun, drink some tea, hit a couple push-ups, and that's it. You'll be fine. You go about your day. 30% don't understand. Oh shit, wrong one. And 97% now. Yeah, I really did not make that like you guys. I did to the 3%, but not to the 97%. So don't take that to heart. Ladies and gentlemen, day number 38 has come to an end inside of the 30-day boot camp. Put a W in the chat if you like that. Oh, quote of the day. Quote of the day. Ready? Quotes of the day. And this one is one for the books. Write it down. Tell your friends. Live by it. If you're not cheating, you're not trying. Remember that. Quote by Alex G. Thank you very much, ladies and gentlemen. Put a W in the fucking chat if you guys like today's class. If not, you don't have an option. Dude, it's not day 38, bro. I know, man. I know. Trust me, I know. Day 25. I feel like ass. I can't believe I already did this whole class today. Cool. Cool, cool, cool. All right, ladies and gentlemen. See you guys tomorrow at 4 p.m. EST. How are you guys liking the boot camp so far? Do you guys really like expect me to put this much time into it? Because you guys love it, love it, love it, worth it. All right. Now let me try and do something, right? Hold on. Let me turn off the chat real quick. All right, so like I want everybody to talk in the chat right now, just so you guys can see when people spam and talk shit to everybody. Look, check it out. So like good. But everyone can talk now openly. I think some people have the option to do it. Oh, it's not working. It's working with some people. I think you have to change the option and instead of it going to host and panelists, you have to put everyone. Yeah, you have to change it from host and panelists and put everyone. There you go. Yeah, I think people are grabbing it now. Well, yeah, that's what I have to read through. So you guys kind of have a little feel on what the hell I have to do. People just spam, bro. It's so hard. So, oh wow. I guess you guys are talking into each other. Okay, sorry, I had to turn it off. It'd be so hard to read that. Ladies and gentlemen, thank you very much. I'm glad you guys are liking the boot camp. My commitment here has still only begun. Um, and yeah, that's all I can say. I love doing this. And to the 4% that want to troll, trust me, these things look short, but they're powerful. Remember, it's another quote for the day. It's not the size of. Huh. You know what? We'll save it for next class. Ladies and gentlemen, see you guys in the next one.